Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, we're back with another episode of the Real Estate Investing Club Daily Deal Review. Today we have Ryan Groene with us again. If you guys missed his full episode, it is one behind this. He goes deep into mobile home parks and why it is a great investment, possibly for you. So check it out if you missed that. But today, Ryan is here to talk about his deal. So Ryan, thanks again for hopping on the show.
Yeah, appreciate it.
All right. So if you guys are unfamiliar with Daily Deal Review, this is where our guests go over one specific deal that they've done in the past. Ryan is a mobile homes park expert. So Ryan is here to talk about one of those mobile home park deals. Ryan, where was this property located and what type of property was it? We already know the answer to that one.
Yeah, it was a mobile home park with it was 75 units mobile home park. It is in Fayetteville, North Carolina. And it actually came with a single family house as well. So 76 total units and nice. Just south of Fayetteville, North Carolina. So if you're familiar with Fayetteville, it's in one of the nicer neighborhoods there. It's not up near Fort Bragg base on the what I call the bad side of town. So
perfect. I like that. 75 units and a house. That house perfect for a property manager. So it's already looking good. So this is your first deal. I know you said that before you got on the show. So how did you go about finding this one?
It actually came from a Facebook post that somebody, so Facebook post that I knew of somebody that was looking to wholesale it, right? So people wholesale parks, people wholesale everything, just like a single family home. So somebody I knew was looking to wholesale it. And then actually I knew a few people that were looking at it and we were like, hey, instead of us outbidding each other, let's just go under contract together and partner on it. And we joint ventured on the deal and we bought the assignment from a mutual colleague.
Oh, nice. Wow. That's the first time I've heard of that one. That one's great. So you guys kind of saw that, you were each making bids on the property and you're like, screw it. Let's do this together. Let's not shoot ourselves in the foot here.
Correct.
Awesome. So how did you go about deciding on the price? How did you analyze and make the offer?
So, took the gross revenue, what the park does generate, applied an expense ratio, looked at the net operating income or NOI and looked at the price and was like, yeah, there's some good opportunity here. And then there was some bigger things to the picture, right? There was some value add. We could connect to city water. We could infill, 20 plus spaces. There was room to raise the rent, build back utilities, and then improve the park overall, right? So, it was a really good price. We bought it for about $7,500 a space. So.
Oh, wow. That's great.
$7,500. Sorry, 10,000 a space. Apologize. So,
Still a good deal.
Yeah.
All right. So how'd you go about financing it?
At first, we tied it up in May or June, and it took 6 months to close. We looked at hard money. We pitched every bank under the sun. Nobody would finance it. So we went back to the seller. We knew he owned it free and clear. We're like, hey, we want to close this. You want to get rid of it. He was actually like a professional. He was a dentist, I think, and had owned multiple parks and just was winded down. And he offered to finance it for us. We put 20 or 25% down. He held the note interest only for 5 years, and we still have that park today, and we still have not refinanced out of it. So that's how we got the deal done. So,
man, I love hearing seller financing because it is a win-win for both parties. That's awesome, you guys, and you got interest only too.
Correct, but seller financing is not it can be a trap at times as well, because sometimes the terms aren't as good as what you could go get elsewhere. So keep that in mind.
Oh yeah, no. Generally, sellers want 50% down, and I'm like, come on,
yeah,
man.
or something crazy.
That's not going to work.
Yeah, which as a seller, I mean, heck, I would want some skin in the game as well. But I when capital gains go up, I could see myself financing some of the stuff I own if I own it free and clear as well. So
yep, for sure. What interest did you have on that, if you don't mind me asking?
I think it was like 5.5 or something, which at the time 3 years ago was like a point or two above. Was a point or two regular above what we could get at a commercial loan. So
okay, nice. So you already mentioned this was not just a stabilized park. There was a little bit of value you added to it. So what were the steps you took? What value did you add to the park once you bought it?
So we took it over. Rents were at $225. They're now at $285. So we've raised rents quite significantly in under 3 years. We have not sub-metered yet, but we brought in 20 homes. We'll be at 75 out of 76. We'll be at 74 out of 75 spaces, and the single family home is rented for a higher price than what we had it for. The big value add here was we repaved the roads, total trash roads, and it had well water, and we connected to city water. We knew city water was out front. We knew approximately how much it would cost and what we had to do. And the well actually was contaminated with 226 and 228 radium, which is not as bad as it sounds. It is bad, but it's not a finable offense as far as the North Carolina EPA is concerned. And there's no guarantee if you drill a new well that you won't hit the same source. So you can filter it out, and then it becomes a radioactive substance. So we just said, hey, let's bite the bullet and connect to city water. So that was the big value add, that we connected to city water.
Nice. I like it. And it sounds like, right out front of your park. So you guys didn't have, I've seen those bills go through the roof. If you have to connect city water, it's a quarter mile away and you got to dig a trench all the way through. It's a lot of money, but it sounds like this one, it didn't bite you guys too hard. It was just right out front there.
Per space, we got it done for less than 500 a space.
It's not bad.
So
awesome. So that's your value add. And this next question, you don't have to go into specifics, and it sounds like you guys are still holding it, but what is the pro forma exit? What are the numbers you guys are looking at?
So like I said, we bought it for about 10,000 a space. And we're exiting at, we're actually potentially under contract to sell it in the future. Potentially that's an exit plan. Or we're going to refinance it into long-term agency debt. Just due to the timing of this recording. That's kind of our two exit plans. It's always the exit plan, right? Refinance and take the cash and hold for the cash flow, or you exit and roll it into something else. So we're entertaining both options, but if we did exit it, we would probably be somewhere between 25,000 and 30,000 a space. So somewhere in the 2 to 3 million range is kind of the market where we are today, based on cap rates, valuations. Things have gone up in pricing, and there's still room to run at that park. There's still, I always like to leave some meat on the bone for the next guy if I do sell it. What value can they add? Because at the end of the day, you're providing affordable housing, and these people are living paycheck to paycheck. So, that's what we would do if we were to exit it. So we're going to make, 2.5 times our money if we do sell or even refinance.
Perfect. I love it. And this being your first park that you actually bought, this next question, I'm sure you got an answer to, because lessons abound in every deal, especially the first one. So what is the biggest lesson that you learned going through this process?
It's possible to turn around a park from afar, but it's a lot easier when you're within 2 to 3 hours of the park and can be there, right? So you have to have somebody on your team, even if it's the on-site manager, you have to have somebody above them that can check on the park at least once a month, especially when you're buying a turn. If you're buying a 50 space, all pitched roofs, older community, and lot rent's $300 and it's already sub-metered, you can go there once a quarter. You'll probably be okay. But when you're buying turnarounds and you got a little bit rougher of a park and you're turning residents, you're moving in homes, you're doing this, you're doing that, you have to be able to visit and check your manager every 4 to 6 weeks, typically, if not more. If you're going there every week, it's probably overkill if you're not self-managing, but or you don't have the systems, or you don't have the manager in place that you should. So that's what I would say. It's possible to buy parks from far. Actually, it's probably better because then you have to create the systems and create the trust that allows that manager to do their job. Because on a day-to-day basis, when there's no park-owned homes and no rentals, mobile home parks typically don't have a lot going on once you're past the initial year, 24-month turn. So,
Yep. So biggest lesson sounds like if you're buying a FAR, you have to have systems in place and you have to have somebody on the ground that you trust and can actually be there when things do go wrong. And I can relate to that one. So that is good lesson. And that concludes it. So that is the Daily Deal Review. Thanks for hopping on, talking about your deal.
Yeah, I appreciate it, Gabe, and thanks for having me on again.
All right. For everybody who's here with us today, again, thank you guys for showing up. You're the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe, therealestateinvestingclub.com. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the investor's quick analysis calculator and offer tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the investor's daily success tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the wholesaler's template for quick assignment cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.